Good afternoon, traders and investors. Will back here with another one. Hope everybody is doing well, wrapping up the first week of the new year in trading. So today we had a bit of a mixed day in markets after an NFP Jobs report. We will definitely be going over the jobs report, guys, because it was a good one. However, bit of a double-edged sword as it does turn into a potential catalyst for the Fed not bringing down rates as soon as the market had been anticipating after the November and December rallies. That was the reason for the rallies in the first time, expecting rate cuts as soon as March. But now with the jobs report and the jobs being quite strong, it begs the question, can the Fed actually keep rates higher for longer because the job market remains strong despite coming down in inflation? So we're going to go over that duality here in a bit of an article that I have prepared for you guys early on in the stream here today. After that, we'll be taking a look at our major indexes and see how they held up today. And lastly, we'll be going over our big tech stocks as per usual. And lastly, we'll be going over my portfolio since it is the week ending stream. So without further ado, guys, let's get right into today's video. SPY up 0.14%, QQQ up 0.12%, and financials and healthcare kind of holding their own on the day as well. The biggest loser of the day, obviously, your IWM Russell stocks once again. But guys, today was a bit of a mixed market. If your portfolio was down, even though the indexes were green, I completely understand. Very mixed market. If you take a look at my growth list here, pretty much mixed across the board. A lot of red, but then you have the balance of green. And it's just the same if you were exposed to value stocks here as well. My value list, lots of red nonetheless. And still though, lots of green. So depending what you were invested on today, your portfolio really could have went either which way. If we take a look at the heat map here, guys, you'll see that as well, right? Fairly mixed market on the day. We had a few losers on big tech, but a few winners in the positions here, most namely, semiconductors have a very good day today. Meta up as well, Amazon up as well, but a lot of downside in your big tech category as well. Financials did good for the most part, and healthcare was relatively mixed, even though they did put in a green day. On the one day relative here, guys, you'll see that financials pretty much led the way here today, followed by utilities. A lot of major sectors in the green. Technology, not in the green by that much, but did have a few gains here. Consumer defensives really on the downside. On the 1 week relative performance here, guys, you guys know that it's been a very rough week in the markets as a whole to start off the new year. So this is exactly what you see. Technology and consumer cyclical really leading the way down, mostly due to your large name tech stocks. I'll bring back the chart, right? On the 1 week relative performance, you can see most of our loss leaders here is once again big tech. And you compare that with the 1 year performance, and that's where all the gains, all the profit taking is coming out of the market. It's most specifically in your big tech early on in the year. So reasons for the drop this week, guys, are yes, number one, profit taking, but number two, what we're about to show you right now in terms of the jobs report we got, which also ties into the Fed minutes that were on Wednesday. I'll remind you, the Fed minutes on Wednesday just reiterated the fact the Fed will be data dependent. They kind of walked back a little bit of the bullishness that we had last FOMC meeting back in December, where Jerome Powell was very dovish when he addressed the issue of rate cuts. Now, in this minutes that we got, which is just a recap of the meeting, they kind of walked back a few statements about those rate cuts and reiterated the fact that they would be data dependent. This is nothing changed. It's just that the market got overly bullish in December after such a beautiful Fed meeting, right? As well as with how Jerome Powell was answering reporters' questions. And they kind of walked it a little bit back in terms of the tone in the minutes released on Wednesday. And this has contributed to yields coming up this week ever so slightly. And the jobs report this morning also contributed to yields coming up as well. So we'll take a quick look at yields. We don't look at them that often, but we'll take a look at them right now. You can see here, guys, that your 10-year yields have been upticking pretty much over the course of the week, bottoming pretty much last week at the end of the year, 3.8%. And now your 10-year yields are back above 4, but very nice start to the downtrend here, right? So we're just expecting a weekly lower high for potential weekly lower low continuation as the year progresses, and as we get closer and closer to those eventual rate cuts, which will definitely be coming in 2024 here. And also the 20-year yield, you can see the same nice little weekly downswing here, just expecting a lower high on yields before potential weekly downtrend continuation on yields. Yields are pretty much going away here, guys, over the course of the year. It's just a long and drawn out process as traders continue to balance the Fed's expectations. So let's get right into the jobs report and explain this duality that we've been facing in the market, which explains a bit of why traders, after the news this morning, you can see the news report out of the jobs meeting was very, very good. Traders reacting very nicely to that early in the morning, but then selling off over the course of the day as the bears continue to profit take on every single rally bounce here. So let's take a look at the jobs report. US payrolls increased by 216,000 in December, much better than expected. Here you go. December's jobs report showed that employers added 216,000 jobs for the month, while the unemployment rate held at 3.7. This is very, very, very good. That compared with respective estimates of 170,000 and 3.8. So unemployment rate held steady. It was supposed to uptick a little bit, but it did not. And we did add 216,000 jobs. The expectation was for 170. So this is very, very good for the economy. And this is where the duality comes in, guys. Right? When the jobs market is strong, it can create two things. Yes, it creates, number one, a very strong economy and a very resilient consumer. But number two, it also signals to the Fed that maybe the economy is fine with interest rates being higher for longer as the job market isn't getting crushed. So we'll explain that a bit lower here in the article here, right? So here you have your unemployment rate. You can see the unemployment rate has been very, very steady since pretty much 2022, averaging roughly around here, right? 3.6, 3.7%. So really no change in that. That's what you want to see. You want to see full employment. When the Fed, however, sees full employment, it can also see the opportunity to keep rates a little bit high for longer as long as inflation is not yet trending to the target. So that's what they mean when they're trying to thread the needle. When they see jobs is really steady and still roughly growing, they know that they can keep interest rates high for a little bit longer to keep crushing inflation to the downside. So it's a very big balancing act between inflation, the jobs market, and your overall health of the economy here. But they can't do it too much, right? They can't overly crush the economy by keeping interest rates too high, because eventually those rates, they have a lagging effect and they will start having a negative effect on jobs. And as a matter of fact, guys, you can already see this here in your monthly job creation. So look, this is when they started the interest rate increases way back here in early 2022. And you can see the jobs market was very healthy, but as interest rates keep coming down, as interest rates were maintained high and company profits tend to dwindle a little bit as they get hit by the higher rates. Well, obviously they are hiring less and less, and they're even cutting staff in a lot of places. So that's why you can see this clear downtrend in the jobs market. Now your jobs market is still positive, but the Fed is trying to thread the needle. They cannot crush this jobs market anymore here, guys, or we're going to start seeing negative job growth, and that is definitely going to be a recession indicator here. So the Fed really has a job to do here in which they have to start decreasing interest rates sooner than later, or else they're going to end up in the exact scenario that they're trying to prevent, which is a loss of your job market growth as a whole. And we're going to start trending negative here in your job creation, which means people are going to lose jobs, unemployment's going to rise, and that is not the scenario they're looking for. They want to avoid that, which is why the market firmly believes that rate cuts will still be coming as of early March. So if you take a look at the probability watch on the Fed website here, this is your Fed probability rate for if we're going to get drops here coming up in the next few meetings. So you see the January meeting is right here. We're said to be maintaining roughly the same rate. This is our current rate, 93% probability here that we'll be maintaining as is. If we go down to the March meeting here, it's at 64% that the Fed will make a 0.25% or 25 basis point cut here in the rates. And then if you go down to the May meeting, they're already forecasting 51% probability that we'll have another 0.25% drop. So that's the market trying to price in here that the Fed is going to start acting before this job market potentially takes a turn for the negative here. Take a look here at this further chart down here. This is the last one that I wanted to show you here, guys. Or not the actual chart, just want to highlight this point in the article here, right? The belief that the Fed can start cutting is fueled by the view that inflation will continue to recede after peaking at a 41-year high in mid-2022. Inflation is still above the Fed's 2% target, but has been making steady progress lower since the increases began. However, Friday's jobs report could challenge the market narrative of a substantially easier Fed. Because jobs are still good, they think that they might be able to hold the rates just a little bit longer to make sure that inflation is crushed. But in my opinion, guys, they probably won't take that gamble and potentially take the gamble of sending the economy into a recession in the quest of really beating down inflation faster than they are currently doing, right? Jobs growth remains resilient as ever, validating growing skepticism that the economy will be ready for policy rate cuts as early as March. So it's not really the economy here, it's actually the jobs market as a whole, right? So that's what we were kind of bringing up here in the last couple of minutes of talking. Economic growth has held solid after consecutive negative growth quarters to start 2022. GDP is on track to increase at a 2.5% annualized pace in the fourth quarter, which is very, very good still. That's pretty much your annual average here, guys, over the last 10, 20 years, about 2.5%, right? Consumers have been resilient as well. Holiday spending likely hit a record this year, rising 5% to 222 billion. So holiday spending was very good, resilient consumer, but this is where your double-edged sword comes in, guys. When we get bullish jobs reports, well, traders start pricing in, will the Fed actually have to drop in March, or can they push it out till May? Can they push it out till June? So that's what we're balancing here. After November and December, we were pricing in rate cuts for as early as March with almost a certainty. The probabilities were very high in the 75, 77% range. But now with the data that we've just gotten this week, guys, they've pulled back expectations a little bit, which has contributed to a little bit of rise in yields and contributed to a furthering of the market sell-off. So I hope you guys appreciated that recap here on the channel. That's what we'll be viewing this entire year, guys. We'll be always going over three main things. GDP numbers. Is the economy healthy? Jobs numbers. Are the jobs numbers still healthy? And number three, inflation, because these are the things that the Fed is going to watch, which will have the heaviest impact on their decision making for rates coming down. And rates coming down or maintaining the same is going to be the largest catalyst for your stock market this year, because it will directly play into companies' earnings and profitability. And that's what drives this market here, guys. So after that very, very big recap here of what we're looking for the year, let's get into our technical analysis right away. So the bulls are trying to shape up your hourly trend changes. We talked about this yesterday, how there was a lack of willingness to change the hourly time frame here by the bulls. Now we are trying to get it done, right? Trying to create an engulfing move, set the higher low, and then break above for your hourly trend change. Hourly trend change to the bulls will mean that your daily bounce is started. And you have this in a few big tech names that we will go over later in the video here. But as of now, for the indexes, no hourly trend changes have been consolidated yet. This was coming off pretty much your 4-hour oversold conditions down here that we like to point out on the channel. Whenever your 4-hour conditions get oversold, you are expecting an hourly bounce. Now, can the bulls change this into an hourly uptrend, or will they just roll over into next week here and just continue this daily downside momentum right now, right? So on the daily chart, you guys know that the bulls have lost the daily uptrend with the loss of this level right here, 468. So now we are looking for a bounce. The size of the bounce will be key. So if we do get this hourly trend change right here, guys, then you have to see what will be the size of the bounce. If you get a very solid bounce all the way back up almost to the highs, well, the bulls can either V-shape it and all-time highs are back again, or they can potentially two-step this. But if you only get a little bit of a bounce, if this hourly uptrend here only lasts for 1 or 2 days and doesn't get us very far, look at this line here. If it doesn't get us very far, only gets us maybe up to 471 and then starts trending down, loss of the hourly here, loss of the 4-hour again, well, the lower low is likely, and we may just be heading to their 460 down to about 450 level, and that would just still be healthy weekly consolidation here, guys. Anything above 454, just looking for that weekly higher low for trend continuation here into 2024. Now moving on to tech QQQs here. QQQ, same thing as SPY, right? The bulls are trying to shape up for an hourly trend change. We will see if they get that on Monday. They will need to have a break of the high of today's session, which is pretty much 399.50, to confirm that hourly trend change. Hourly trend change means your daily bounce is underway, and then you'll need to measure the size of the bounce here, guys. With such a big move down by the bears, engulfing move, loss of the daily uptrend, need to measure the size of the bounce. It will be absolutely crucial. We are expecting a lower high, but where will that lower high come in? Will it come in here and then roll over? Will the lower high come all the way up here and give the bulls the best chance to reset that daily uptrend to the upside? That is what we're going to be looking out for here in the next week or two in the market. So keep an eye on that. If for whatever its reason we create the lower high and simply roll over into the next week, well, we're looking for this sweet spot here, guys. 394 down to pretty much 382 is going to be the level to watch here. Your weekly higher low is set here, right? 383. So bulls still with a decent amount of space to work with to set that weekly lower high, weekly higher low, excuse me, and then push further to the upside. So not looking too bad. There's a few names within QQQ which have set your hourly trend changes already, and we'll take a look at that when we go over our big tech names. Now moving on to financials. Financials still holding up very beautifully, and this was one of the reasons that the SPY was able to recover during the day here. So daily uptrend is still maintained by our bulls at this point, setting a new higher high today, but it's getting very, very, very tight here, guys, right? Getting very tight. Your RSI is no longer overbought here, but we do have a little bit of divergence, right? This is what you call bearish divergence, lower highs on the RSI, but higher highs on your market, right? So a little bit of bearish divergence there, which is usually a bearish signal for a potential move lower here. So we're going to keep an eye on financials here. Your lower high is set 37.37, but with it being so close here, if the bulls roll over this, they will be losing the daily uptrend here, which will send us into potential weekly consolidation for financials. Financials with a beautiful run and tons of space to give back in the event that we do have a daily downtrend here. Consolidation, keep an eye on your 12 EMA. The 4-hour 12 EMA is not lost either. So those are going to be our two indicators here. Financials holding up fairly good, but we do have earnings next week, starting pretty much on Thursday and Friday. A lot of big names in the likes of JP Morgan as well will be reporting. So we'll see how financials are able to start off our earnings season. Any pullback here, guys, target this range right here. Resistance, previous resistance area, this red box, 37 all the way down to $36. If ever we do pull back here, this would be a great level for a weekly higher low before further continuation in 2024. And financials should be set up fairly well with the rate hikes, with the rate cuts coming lower later in the year. So financials should be able to have a decent year of outperformance after having staying muted pretty much all of last year, stuck in this range right here. Now moving on to healthcare. Healthcare, once again, proving to be very, very resilient here, guys. Even though we had a larger pullback here in QQQ since the highs of the day, healthcare able to maintain as well. Even though they ended green, it's a very, very solid chart by healthcare here. So daily uptrend is well in motion right now. Any pullback at this point, we're just looking for a higher low, anything above 132.72, looking for the daily higher low for further trend continuation. Healthcare is a very defensive sector in the midst of recessionary talk. So with recession or no recession, healthcare should fare pretty well this year. Even if traders play a more defensive aspect, they will be buying healthcare as well. So healthcare should have a year of outperformance as well as financials. QQQ did all of the heavy lifting last year, guys. But if we come into a bit of recession fears and the Fed cutting rates, the XLF and XLV will be your two sectors which will outperform this year as a whole. Now, healthcare, everything's looking healthy, but if for ever which reason we do lose the series of higher highs and higher lows, set the daily downtrend here in the next coming weeks. Take an eye on this level here, guys. 12 EMA starts at about 136.81. Then you have your 136 down to about 132. That's the sweet spot pocket, right? Previous resistance all of 2023 and a very decent area of consolidation that they come, fall back on, accumulate more positions, and then just continue this weekly uptrend here into 2024. The monthly breakout on healthcare is looking very beautiful at this point. It's going to be very tough for the bears to stop it. Now, IWM Russell pulling back again here on the day, 0.29% of the downside, our loss leader for the day. That was to be expected here, guys. Growth stocks really getting hit hard with the talks of potential rate cut pushbacks that we've been having all week, and as well as some profit taking coming in after the November and December rally. So getting hit kind of double-sided hit pretty much this week for IWM. So IWM pulling back healthily off the tops here. Daily uptrend is lost, obviously. Now we'll be looking for the bounce, right? Hourly uptrend. Bulls are trying to set the hourly uptrend. We're going to need a break of today's high, pretty much 195.44 on Monday to confirm this hourly uptrend to the upside. If for whatever which reason we roll over, well, your daily pullback simply continues. Then we'll once again be looking for this move to bottom out. How you know if the move is bottom out? Need to see an hourly uptrend. If we roll over, we're going to be looking for the shift of the hourly uptrend sometime mid next week. But the bears, as of now, in full control of the daily time frame here, right? So keep an eye on that hourly uptrend reversal. Then you'll get your daily bounce. And then we have to measure the size of the bounce, right? If you get a very, very high bounce, you give the bulls a great chance at resetting the daily uptrend, but get a very, very low bounce before the hourly trend turns bearish again. And your daily rollover will just continue into a daily downtrend, into further weekly consolidation. My sweet spot for this weekly consolidation move on IWM, I'll remind you, is 188 all the way down to about 182. This sweet spot right here, which is pretty much the average of this entire range of consolidation. Your moving averages are down there as well, reflecting that that is a very juicy sweet spot in terms of your average price, right? So I will be looking to take positions here on IWM, and I will be favoring TNA, which is your 3x leverage play ETF on the Russell. So keep an eye out for that. Dow Jones performing well here today, guys. Nothing much to say about the Dow Jones, right? Really just consolidating at your highs. Still just looking for that daily higher low. Anything above 37,080 is just going to be looking for that daily higher low. Currently in daily consolidation, but protecting this 12 EMA very, very, very well. So one or two things is going to happen here, guys. We're either going to flush this current previous low like the rest of our indexes pretty much did. Well, SPY and QQQ, healthcare and XLF have been healthy, but SPY and QQQ already have engulfed like this. The Dow Jones has not yet. So one of two things are going to happen. We either have the daily higher low here and we're on for further price increases into next week, or we are going to roll over with the rest of the market and potentially lose the daily uptrend, right? And then head into our weekly consolidation mode onto the Dow Jones. If for whatever which reason it's the latter and we do lose this weekly run here and head into weekly consolidation, keep an eye, guys. I've always been saying this for the past couple of weeks, right? Your previous all-time high area is going to be acting as some decent support. That's 36,800 all the way down to about 36,400. This area right here is going to be the sweet spot where I do expect the bulls to put up a little bit of a fight here. Dow Jones looking very, very good, very, very solid, but just keep an eye, guys. Will we be able to continue this daily uptrend? Or if they do lose the daily uptrend here, just don't panic. It's very healthy weekly consolidation on the Dow Jones. Now let's move down to our big tech stocks. Now, Apple once again red on the day here. So Apple tried for the hourly trend change here today, but you can see getting rejected, right? So very beautiful bounce off the morning. They had a chance to change the hourly uptrend, but unfortunately the bears rolling back over and double bottom at the low of the day here pretty much, right? So Apple with another red day. The daily bounce is still not underway. Daily bounce, you need to see an hourly trend change for the bulls. Then you'll know that your hourly bounce is underway. Where are we reacting from? We're reacting from my sweet spot. Very big area of congestion. This 181 all the way down to 175 is a very big area of congestion here. So that's why the bulls are putting up a fight. Your daily chart is pretty much oversold now on Apple. Your 4-hour chart is still oversold. And if you take a look at Apple, guys, on the daily, Apple doesn't stay oversold for that long, right? As soon as they kind of touch oversold conditions, they usually have a little bit of recovery coming after that. You can see that right here as well. You touch oversold conditions, you have a little bit of a rally. You touch oversold conditions right here, you have a little bit of a rally up, right? So it really holds true in the past. Apple does not stay oversold on the daily for that long. So we may be expecting that bounce to come shortly. When that bounce does come here, guys, crucial to measure the size of the bounce. Bears control the daily downtrend here. What will be the size of the bounce? And to recover this move here, guys, to set the bulls up for a daily trend change, we're going to have a heck of a bounce. The probabilities right now, I'll tell you right away, favor the lower high and then potentially look lower, and potentially then we're going to look at, can they flush these lower lows here and just perpetuate this daily downtrend, or will the bulls be able to put up a fight and change the daily uptrend to the upside? The higher the bounce, the higher the probability that they can change the trend to your daily bulls back once again. But as long as Apple stays poised in this area right here, guys, next week I'm definitely going to be looking at writing some put options on Apple, potentially below 180, to acquire some shares if ever I'm assigned down there. Would not mind, especially if this move just continues downwards in a waterfall drop like this. I would love to be writing some options here in oversold conditions and potentially playing that weekly bounce, right? Weekly uptrend is now lost by Apple as well, but the weekly downtrend is not set by the bears. Weekly downtrend would need a lower high and lower low on the weekly. So still just coming in to our area of support right now. On the monthly, it looks a lot better, right? Monthly is just monthly tightening consolidation right now for Apple. Now on AMD here, AMD recovering better than most. And let's take a look here, guys. Why? The bulls set the hourly trend change. So AMD is a perfect example of when your daily bounce is underway, right? So AMD, the bulls had obviously lost the daily uptrend. We got a flush of the low right here, 135.51, flushed it the other day, right? So daily uptrend was lost. And then we were going to measure the size of the bounce. If the bulls can bounce high enough and recapture that daily uptrend, or if they just bounce a little bit and lose it, that will all be on the hourly uptrend. Now we need to see, how long will the bulls be able to maintain this hourly uptrend? A loss of the hourly uptrend means your daily bounce is finished. And then we are going to be looking, can the bulls maintain this low right here at 134? So you need to see them get as high as possible, give themselves the best chance of setting up for the daily trend change right here. On the weekly, this has always just been weekly consolidation here, guys, right? So nice weekly higher low attempt here by the bulls, right? So anything above 116.58 was just going to be looking for a weekly higher low. And I was telling you guys, watch out for this area. 132 down to 128 is the sweet spot. Previous area of 52-week high. that is now going to be support. You have your moving average down here as well. So it remains to be seen, can the bulls just react from this zone once, pretty much a touch, almost a touch, right? Almost a touch and go of this area, or will we just be heading for a lower high and then lower low, potentially retest of this area? The closer we come to this area, the juicier I am looking for writing options on it, because I do still believe even if we pull back into this area again next week, just looking for your weekly higher low for further trend continuation, bulls in full control, and your monthly breakout at this point is absolutely beautiful. Now moving on to Amazon here, guys. Amazon looking kind of weak, even though they're up 0.5% on the day, still struggling within our range bound area right here, right? So you guys know 148 all the way down to pretty much your 142 level was a very big area of congestion for Amazon for the better part of pretty much a month worth of trading right here. So that's why it's kind of tough for the bears to really get through this area in one clean shot. Amazon trying to put on a fight. So after having lost the daily uptrend here, daily downtrend is set. We're looking for the bounce. Have Amazon bulls started the bounce? Not yet. Looking like SPY and QQQ trying to get an hourly trend change underway. We'll see. Can they get it done on Monday? That will be a break of our high today, 146.56. Get that and your daily bounce is underway. Your hourly uptrend is going to be set and then your daily bounce is underway. Then we have to measure the size of the bounce here, guys. But keep an eye, your overhead 148, 149 level is now going to be resistance, and the moving averages right here, which Amazon has not been below both of these moving averages since the start of the rally in November, will also be acting as resistance. So the probabilities do favor a lower high in this area right here, and then remains to be seen, can the bulls protect these lows right here and potentially set up for a daily trend change, or will we just get a very soft bounce, roll over the lows, create another furtherance of the daily downtrend, which would just mean more weekly consolidation. But now we have to be careful on Amazon here, guys, right? Amazon, your higher low is right here. This is the 142 level. So 142 is your weekly higher low, looking to set the weekly higher low at this point, but the bears have taken back a lot of the move here, guys. So the best case scenario for the bulls right now is just be able to double bottom this, potentially go into a little bit of a tightening range, because when the bears engulf so much of a move, it's very rare that you get a straight V shape off of this. Usually it takes a little bit more time of accumulation before you get that breakout pattern on the weekly. So still a weekly uptrend here, guys, but running out of space quickly are the bulls. So let's keep an eye on that for Amazon. If for every which reason, guys, we come back down into the lower 140 areas and challenge this area again, it's fine. The monthly has space to give, right? Even if we come down to the 135 area, that is going to be a buying target for me for Amazon shares. Personally, I would love to have a dip down there. Yes, it would erase a lot of daily moves that we've done. Yes, it would erase the weekly uptrend, but there's no reason the bulls can't recapture the weekly uptrend after something like this. It's going to take them more time, but definitely a decent buying opportunity if ever we dip down into there. For now, the bulls still have some support in this region. Now Google, right? So Google also looking fairly weak here on the day here today, right? So 0.5% to the downside. I apologize for all these lines. These are my trades down here, right? And this is pretty much the area of support we have just pretty much crashed through on Google. So Google daily downtrend is set at this point, right? No signs of the hourly trend change coming as of yet. So still looking for that hourly trend change. Daily downtrend is well in motion for Google right now, kind of collapsing below our moving averages right now, and also below this area of resistance, support 140 all the way down to 138 was the area to watch. Unfortunately, this will now be acting as a bit of resistance off of any bounce. So we will see, guys, if Google can get a bounce going next week, we have to get as high as possible to your most recent high, which is going to be right here. 141.05 is the level to watch. Get a bounce high enough, the bulls can change the daily trend change back to the bulls here, but get a low bounce here and use this area as resistance. We're just going to continue this daily downtrend right here. On the weekly bulls still have some space. That is some good signs here. 129.32 is the area to watch here. Line in the sand on the weekly. Weekly uptrend is very beautiful right now. Just looking for a weekly higher low. Anything above your low right here is just looking for that weekly higher low here, guys. We do have the moving averages coming in here as well. One thing's for sure, guys, if Google does come down in the lower 130s, it is definitely a buying area for me, guys. Google has some amazing fundamentals here, guys. Over 15% revenue growth for the year, over 15% EPS growth for the year as well. And the return on capital is very, very good too. Very solid fundamentals by Google. So I would not be worried in this position in the slightest. And on the monthly here, guys, you do have a monthly breakout pattern underway. So I do believe that Google should be reporting some very good earnings early February. So we'll see how the price action can deal with the markets here up until February. But one thing's for sure, I do think that Google will have an outperform after their after their earnings here on early February, and especially giving good, they're probably going to give good guidance as well for the year. So looking forward to that. Now on to Meta. Meta performing better than most here today, guys. Meta and AMD are two of your big tech stocks that have set the hourly uptrend here, right? So Meta consolidation, right? Now we finally have the hourly trend change. So hourly trend change to your bulls. Look at all this space that Meta's created off the lows right here, right? So looking to persist this hourly trend change into Monday. Hourly trend change to the bulls means your daily bounce is well underway at this point. So we will see how high can they get here, guys, in relation to 362.71. Meta had never lost the daily uptrend. We were always looking for a daily higher low for furtherance of the daily uptrend right here. So that being the case, your new daily higher low, since the hourly trend is to the bulls now, the new daily higher low is 340, right? So going to be looking to put in enough of a move here to recapture our highs, but any move down now is just going to be looking for a higher low above your 340 level, right? I'm expecting Meta to continue this a bit further here, but the daily uptrend is well in motion. You have your daily higher low. Now we're just looking for trend continuation here. If for ever which reason we roll over and set the daily downtrend here, Meta, a lot of space on the weekly as well here, right? See this beautiful weekly uptrend. We were just in weekly consolidation for the past week as well. Anything above 313.50, just looking for a higher low. So even if next week, right, even if we pull back into daily downtrend into next week, if the rest of the market keeps pulling back here, that would just be another week of weekly consolidation for Meta. Anything above 314, right? Just looking for that weekly higher low for further trend continuation. So looking very good on Meta as opposed to a lot of your other big tech stocks named Meta and AMD have the hourly trend changes. Moving on to Microsoft. Microsoft doing a whole lot of nothing again here, guys. Stuck in the accumulation range once again for the better part of the last month at this point, right? So the analysis doesn't change here, guys. Break of 377, and you have the resumption pretty much of your daily uptrend, and you have your weekly higher lows are set, and then you'll just have a resumption of your weekly uptrend. But break this to the downside here, guys. Well, the bears are in control of two time frames. They would control the daily downtrend, but they would also control the weekly with a weekly downtrend. Haven't had a weekly downtrend on Microsoft here since this period right here, July into pretty much September, right? So that was your weekly downtrend. This weekly downtrend is looking a lot healthier though, however, because we're past the all-time highs, right? So weekly downtrend, break of this range would be started. I would be looking for some buy positions here, 355 down to 340. Why? This is just monthly healthy consolidation on Microsoft after your break of the all-time high. Microsoft's numbers are going to be looking very good for 2024. Should have a very good year. So even if we lose this little range that we're in right now and set the weekly downtrend, that's fine, guys. Just a little bit of monthly consolidation here. Microsoft does have earnings coming up here in a couple Wednesdays here, 31st of January. So we're going to keep an eye on how that plays out here, guys. But one thing's for sure, for whatever reason we lose this range and come down to my 355 to 340, I will be looking to make a breakout, retest, purchase of Microsoft down here for further price expansion into 2024. No red flags for the company at all. Netflix looking not too bad here, guys, right? So the hourly trend change was started as well. So Netflix is one of the rare tech names that does have your hourly uptrend in motion right now, but losing it ever so slightly here today. So we will see, are the bears going to take control of an hourly downtrend into Monday? That would mean that your daily bounce is finished. Netflix daily downtrend is currently underway, so we're looking for the size of the bounce. Need to get as close as possible to 494 to really set the bulls up to reverse this into a daily uptrend renewal here, right? So that is what we're looking out for on Netflix. Keep an eye on your hourly trend here on Monday. If they continue the hourly uptrend to the upside, your daily bounce just continues here and we get closer and closer to giving the bulls the best chance possible, even above these moving averages right here, of resetting that daily uptrend to the upside. If you lose your hourly uptrend, right, into Monday, that means that your daily move up is finished, and then we'll be looking, can the bulls save the lows here? 462 is going to be the area to watch. Lose 462, the daily consolidation just continues here, and then we just continue our weekly consolidation on Netflix. The area to watch here, 446 is your weekly higher low. So still just looking for a weekly higher low in relation to this guy right here, but so far the bulls playing some decent defense. We will see how next week plays out. One thing's for sure, if the markets just continue to drag Netflix back down into this level, 450 down to 425 is my sweet spot for buying. It would just be a breakout of your previous 52-week highs on the monthly. Breakout, retest of the zone here on the monthly for potential price expansion into 2024. Netflix is supposed to be doing some very good things in 2024. I loved their numbers in 2023. Their expansion here is very, very good in terms of subscriber growth and in terms of their new ad tier that they've launched for cheaper than a normal Netflix subscription, kind of like how cable television includes ads between your programs, or how YouTube does it as well now. Well, Netflix went with an advertising tier, and contrary to popular belief, it's actually been performing very, very well, and it's helped improve their margins a lot. So looking forward to Netflix delivering on some very beautiful earnings this year as well. If we get a little price dip here, 450 to 425, I will definitely be taking a play on Netflix. Now moving down to NVIDIA. NVIDIA, one of another big tech stocks here with the hourly trend change. So that's what we were looking for yesterday. Can the bulls maintain the hourly trend change into today? You guys remember yesterday's video? Well, they actually did. So now your daily bounce is healthily underway, 2.29% to the upside here. We'll see if they can maintain this hourly uptrend into Monday. But now the bulls are looking very, very healthy here, guys, right? So it was a daily downtrend. We were worried about the 450 level. Why? Because that was the line in the sand on the weekly. But we always knew it was a weekly tightening range here. That's what I was saying, guys, is I want to see this tighten up here and potentially get a break to the upside. This is a weekly bull flag. It's looking very, very good. The flag is being maintained at this point, right? And now the bulls have taken back a lot of your most recent selling leg. Put the fib on this, guys. I know it's only a few days of trading, but every one of these moves matters a lot. So now the bulls have taken back this blue line right here. You may not be able to say it, but that's 80%. So the bulls have taken back 80% of this most recent move leg down here. So that means to say that even when we get a little bit of a downtrend here, right? When we lose this hourly uptrend, let's say we lose it, there's two possibilities. We can either V-shape this and reset the daily uptrend to the bulls, or we can do it in two steps by resetting a little bit down here, setting the higher low, and then giving the daily uptrend back to the bulls as well. One thing's for sure, the probabilities do now favor the recapture by the bulls of this daily downtrend into a new daily uptrend. Just remains to be seen. Can they do it in one shot? We potentially have to do it in two shots. The weekly looking very, very healthy. We've avoided coming too close into this 450 level, right? So now the bulls have a very good chance here of the weekly breakout of this bull flag right here, potentially even breaking out into a monthly uptrend here. You can see this 500 resistance has been very, very powerful. So we will see, can they break it? If they break it, they recapture all of the time frames, recapture your daily, you recapture your weekly uptrend as well, and you then persist into a beautiful monthly uptrend on NVIDIA. So very big level, 500. Now moving on to Tesla. Tesla, once again, down on the day here today. They came all the way as low as about 235 here today, recovering ever so slightly. So Tesla, one of those stocks that unfortunately has been plagued now with the most recent discussion this week about interest rates and whatnot. They've been steadily down pretty much as well since their delivery numbers that came out right around here, right? So daily uptrend is lost, unfortunately. Now the bears have a golden opportunity here to set up a daily downtrend. Overhead moving averages are going to be resistance now. Your 246 level, which is the higher end of this range right here, is also going to be resistance. So we'll see, what are the bulls going to be able to do? Tesla with earnings here in about 2 Wednesdays. So coming up quickly here, guys, on the 24th of January, we'll see what they do with that. But the hourly bulls still not in control here, guys. Your daily move down is not done until we can get an hourly uptrend confirmation. If you can get that hourly uptrend confirmation by the bulls here, well, I will need to see them push above this whole area of congestion. If you get me above this area of congestion, we can then use it as support, set up for a potential daily trend change. But if your hourly uptrend only takes us up to here before reversing and then starts going lower, well, the bears have a golden opportunity of pushing it down into the lower end of our range. That's going to be around the 228 level. And on the weekly as well, running out of space, this is your weekly higher low as well. So weekly uptrend was set by the bulls. Now a bit of retracement. Don't like to see the size of this pullback here, guys. Even if we do stop right here, it leads me to believe the best we can get is potential further consolidation before a breakout. Very rare to see the bears take back so much of a move and then you get a V-shaped recovery. Look up here, right? Weekly loss of the uptrend, a big weekly cut down right here. And then it takes a while for the bulls to accumulate. And this is when the markets fell off a cliff pretty much in October. It wasn't really Tesla's fault, even though they did have a fairly bearish tone on their earnings, right? But let's say that this was having a bullish lean. You can see how long, when bears engulf a move here, guys, you see how long it takes for them to create a new pattern to get above here, right? So Tesla, not looking the best, but still with an area of defense. If we do pull down in this lower area right here, guys, 227, 230 down to 200 is my sweet spot for Tesla. As low as we can go, I will be writing some put options here, looking to make some juicy premium gains from that. Haven't been able to write Tesla for a minute since they've been trading upper in this area. So we're going to be looking forward to potentially making some moves on them down here. So bulls absolutely need to start making a move soon and starting to reverse a little bit of this engulfing move by the bears. Very, very powerful move by the bears, top to bottom, pretty much 11%. Now moving on to Palantir. So Palantir, bit of a recovery here today. Palantir got downgraded early in the morning. They gapped down, but then recovered intraday, right? So big gap down open right here, and now recovering intraday. Palantir, we're going to be looking for the same thing as the rest of our big tech stocks and the indexes. The daily downtrend is in full control by the bears. The second leg down, we still have no hourly trend change, right? They tried with a bit of it. This is including your pre-market hours and after hours, right? So I'm including everything here. They tried it, but unfortunately the bears rolled over. So now we need to see a confirmed hourly uptrend into Monday. If you want to see that your daily bounce is underway, your daily bounce could potentially be getting started soon here, guys. 1550 all the way down to 1375 is going to be that big area of congestion that we spent a long time in during 2023. So we're coming up on it now. So this should be the area where your bulls are going to react from. We're going to see how high, once they get the hourly trend change here, how high can the bounce get in relation to your 1792 lower high that's right there, right? So need to see a sizable bounce, and only then can the bulls get set up beautifully for a daily trend change. If you only see the hourly trend change, right? If you only see the hourly trend change last for a couple of days, not that high, and then roll over, well, then you potentially have the continuation of your daily downtrend, which will bring us further and further into our big area of support down here, right? I will be looking to write more options on Palantir here. If we come back down to around 15, 14, that is where I want to do an average from my 18 purchase that we had just a few weeks ago. So keep an eye out on that for Palantir. Not looking the best, but at least we're coming into a very big area of support down here. And now lastly, PayPal. PayPal actually reacting nicely here today, guys. 2.86% to the upside, one of our largest gainers here on the entire list on the day here, reacting beautifully. I drew this line yesterday here, guys. Your 5750 area was crucial, right? This whole area, 60 down to 57.5, was an area of congestion for so long, and I didn't want to see the bulls lose that, because then they would have to then they would be using it as resistance, and the daily downtrend could potentially head us lower into the 50 zone. But now the bulls have been playing great defense, even after having lost the daily bull flag right here, giving a big push down here, right? We have recaptured a lot of the move so far in just one day. So the hourly bulls have now started resetting the hourly uptrend to the upside, right? So step number one is complete. Hourly uptrend. We'll see if this can persist into Monday, which means your daily bounce is now underway. We'll see how high can it get here, guys. Very decent size of the bounce after one day. We're talking almost 50% of the move down the bulls have recaptured in one day. If we can get one or two more days like this, get as close as possible to 63.44, the bulls have a good chance of resetting a daily uptrend to the upside here. So that is what we're going to be looking for. But if we taper off and lose all of this into next week, the daily downtrend will be set, and we're just going to be set for further weekly consolidation on PayPal, right? So that is what we're looking for on PayPal. PayPal, we're still just looking to reset the weekly trend to the upside here. So still just looking for a weekly higher low to give us some upside potential here. And I want to see us protect these weekly moving averages. You can barely see them because the chart's so clamped down right now, but we are still above the 12 EMA right here, this yellow line right here. And you need to maintain above this line here, guys. You can see how big of a struggle it's been for PayPal to maintain above this whole line. Still looking for the eventual break of our downwards trending trend line right here, which is pretty much set at your $65, $66 level. So we'll see, can they set the weekly trend change here in the next few weeks? One thing's for sure, need to reverse this daily uptrend to the bulls here, and then need a break of our 64.24. You will get your weekly uptrend, and then we need to break this line right here. So everything looking decent on PayPal, just need to protect this lower level with their lives right now, or it's going to take a whole lot longer to reverse your longer time frames, guys. So that's everything for the technical analysis. Let's look into my portfolio. So taking a look at my portfolio here, guys. Well, we started the year red. Look at this. The S&P and NASDAQ are kicking our butts pretty hard. We're down 9.39%. It's not as bad as it seems here, guys. So as I was saying, pretty much at the end of last year, we made a very big withdrawal at the end of the year here, but we kept most of our positions open. So I withdrew about $15,000 here on a six-figure portfolio here in roughly about $120,000, $130,000 range. But we left most of our positions open, which means that we're running a little bit more leverage with less cash. So that's why the drop off into the early part of the year here has been so significant. If I would have left that money in, this drop would have probably been less significant here, but still nonetheless, a heavy little drop, 9.39% in the first week of trading here, guys. Not nervous at all. You can see usually we're performing at about a 2-to-1 to the QQQ, and QQQ since pretty much your highs, right? We're down pretty much almost 4%. So we're roughly about 4 and something percent, roughly about double what the QQQs did. So we will be looking to recapture a lot of this, guys. I'm very happy with all my positions, not nervous at all. Just a quite rocky start to the year, as every single one of my positions here, guys, has pulled back significantly over the course of the year. Not much action from me in the course of the portfolio this week. I'll take you a few of the trades that you don't see here anymore. So we did have some covered calls leading into the week. I showed you that, guys, that on Monday here on CSIQ. We had 4 covered calls here. Let me put myself over real quick. So we did have 4 covered calls on CSIQ. I closed those. We wrote those for about 85 cents at the end of last week. We closed them for 8 cents. This is pretty much an automatic take profit here at about, your 90% take profit range. So we take profit on those covered calls here in CSIQ. Our average on CSIQ, it's pulled back significantly here since pretty much last Friday. Our average is down to 27.18. So CSIQ, heavy pullback, about 10.5% since we wrote those covered calls. So we'll be trying to trail this a bit to the downside, but I still do like the company. Just a heck of a pullback in terms of that, largely due to their influence by interest rates. Today we wrote a covered call. Actually, yesterday, as a matter of fact, we wrote a covered call on CP. So CP's been a position I've been in for a while. Just want to protect the gains here in the event that the market continues to pull back. And $80 in terms of covered call. You can see our break even down here is roughly around 71.75. With that covered call, I didn't add it, but with that covered call, just take off $1.10 from this. So let's call it about 70.65 is going to be my new average on this. 70.65 is going to be the new average. And you can see we're trading right at overhead resistance, that $80 mark. So I just wrote $80 covered calls for the next 2 weeks. That's pretty much about 0.5% a week. So I'm pretty happy with the premium that I got on this covered call, just looking to protect a little bit of the gains, but I love the company. Google as well. You can see Google, we actually rolled it twice this week. Google, we did have $1.48 for the 141s. And yesterday I played a bit of a cheeky play with Google having sold off a bit. I rolled it down by 1 strike just to get a little bit more premium. So that's what you see right here. We got 149 plus an extra 10 cents for the move that I did yesterday. So all in all, our average cost on Google is down to about 131.29. Price is currently pulling back here. Yes, we had a very juicy opportunities, a couple opportunities here to sell up into the 140s. But I like my average cost on Google, and I would not be opposed to even adding more shares here, guys, because I do believe in the breakout pattern for Google over the course of the year. I would not really want to let go of this stock much before its all-time high resistance level, and that's pretty much 146 to 150. So that's why I'm holding the position instead of having taken profits and potentially readjust. It could have went either way here, guys. Google was well set up for the breakout. So just looking to farm the premium. I've made pretty much, very, very good premium on Google ever since being assigned to it. So I'm making about 1% per week in terms of premium. So that's exactly what I'm looking for in the strategy. 0.5% to 1% a week is fine for me. If I can do that, I will hold the stock. And now Trade Desk, we did write the calls here that ended up worthless. So you saw we wrote after being assigned at 72, we wrote the $72 calls for the week right now. And you can see that the prices pulled back significantly from there. So we're still just looking to farm a little bit of premium. Next week, if we do have an update on Monday, I will probably be looking to write the 71 calls here. If we do get a little bit of a bounce here after being pretty much oversold conditions on the 1 hour earlier in the week, and now really coming into oversold on the 4 hour. So just looking for that 1 hour trend change by the bulls here, then we'll be looking to write a bit of covered calls. But I love Trade Desk in the lower 70s and even $60 range. Absolutely love the company and do believe it's well positioned for the year. And the rest hasn't changed, guys. I didn't write anything this week. We're just waiting for these pullbacks. It's kind of like those movies where there's like 2 armies facing each other and one captain or one general is like, hold the line. That's what I'm doing right now. Just hold the line, wait for the market to come to you. Microsoft, Apple, right? All these plays, more Amazon shares. I'm just waiting for the juicy opportunities to come to me. Not looking to get too greedy, even though because we know that another week of pullback could potentially come, maybe even 2 more weeks, right? And all these companies have earnings coming up in the next 3 weeks. So that's why I'm holding back a little bit, waiting for the best deals to really start this year off strong for that recovery rally that we're going to get after here late January into February. And all the rest is left unchanged here, guys. Adobe has dropped significantly from last week, still holding those. Amazon has dropped since last week, holding those. TMF play, right, the 20-year yields, that's come down as well with the most recent spike in years. Oracle down from about 106 to now 102.50 over the course of the last week, so that's come down as well. Bitcoin and Ethereum have come down a little bit as well. BABA down from pretty much 78, 79 last week down to 73, so that's taking the portfolio down. CP is the only real one that hasn't really moved. Excuse me. Google's come down obviously as well. Nike's come down from about 106, 107 all the way down to 102, so that's another loss that we just keep right there. Not high enough for covered calls. Starbucks still assigned on those. That Starbucks has come down from 96 all the way down to 93. So another loss on those. Trade Desk as well. Trade Desk that got assigned recently. Palantir down from about 1750 all the way down to 16. So that's another little red position that's increased over the past week, right? PayPal obviously pulling down from the $63, $64 area, that as well. And CSIQ, Canadian banking shares haven't moved too much. So as you can see, guys, right, this 9%, really everything in the portfolio pulling back simultaneously. I didn't really trim much gains, just made a big withdrawal. So now we're maintaining the same amount of positions, same amount, and now we have a bit less cash to work with in terms of the total account value. So that's why the leverage is a little bit increased, which is why now we're underperforming the markets. But it's okay. I'm very happy with every single one of these positions, guys, and we are going to ride them and generate some substantial profits with them. So I hope you guys enjoyed that update here. Next week, if we do get more red, that is when I will be writing new positions here. Right. And then after that, you guys will see how I'll be able to milk covered calls on all of these existing positions here, as I've done so well over the course of last year's showing you guys on the portfolio. So that's pretty much everything I had for you guys here today. Hope you guys have a beautiful weekend. I will see you this weekend, as a matter of fact. I'm going to be posting 2 videos. One, advanced options strategy. That's going to be going more into detail over leap options and some short put options with more time to expiry for a breakout retest trade. So this is going to be how we can farm premium a bit more aggressively and pull premium forward to capture a lot of it on longer dated short puts. So that's going to be very juicy. I haven't really talked about it much on the channel, but when we are in a monthly uptrending charts, monthly macro, monthly uptrending indexes rather, and very positive macro, that's when I break out this strategy as well. Haven't been able to use it last year, so that's what we're going to show you guys this year as well. And as always, guys, consider dropping a like on the video if you enjoyed the video. Consider subscribing to the channel as well. If you're new here, we'd love to have you. Thank you so much to all of you guys. We're almost up to 600 subscribers. It seems as we were at 500 subscribers like yesterday. But great job, guys. Thank you so much. And as always, guys, any questions at all, right? TA, options, stocks, macro, whatever you want, put them down in the comments and I'll get back to you ASAP. So take care. See you soon. Hope you guys had a great week. Peace.